Hi, I'm Jim Gordon, and you're watching Market 1 Minute. Joining us is Drew Clark, the president and CEO of Summit Royalties. Drew, welcome.
Thanks, Jim. Thanks for having us.
Okay, Drew, talk to us about Summit Royalties and why is the royalty streaming model compelling in today's markets?
So let's talk about the royalty model itself first. Royalties are fantastic financial instruments. They're free carried interest on a mining property. They require no ongoing capital costs or operating costs once acquired. This results in a very high margin business. The magic happens when you acquire a portfolio of these, however, and when you get a diversified basket, they trade at a premium in the market that what these individuals would fetch in an individual process. So let's talk about Summit. Summit is the newest entrant in the precious metal royalty space. We've gone from 0 to 47 royalties in the last year, and we're already generating cash flow for investors, providing real meaningful exposure to rising precious metal prices today.
And how did you manage to build your portfolio?
So we started the company in May. We bought a portfolio of royalties off IAMGOLD. That resulted in sort of the nucleus of what we started building around. After that, we announced an RTO with Eagle Royalties. That brought in the bulk of our royalty count, about 38 in total. Most notably, it brings in the Ormac royalty. And then after that, while we were getting ready to go public and finalize the RTO, we did a bilateral acquisition with Sprott Resources where we bought in the West Red Lake mine.
And Drew, to add to that, how have you funded your acquisitions?
Principally through cash and a little bit of shares. With IAMGOLD, we gave them $10 million in cash and $7.5 million in stock in Summit. But for the most part, we've been deploying cash that we've raised privately. All of that cash has been raised at 90 cents and without a warrant. Notable institutions in the book include Adrian Day Asset Management, US Global, Libra, Delbrook, Spartan Funds, and Macquarie, along with some very high net worth individuals that have helped us sort of formulate the company and fund our initial portfolio.
And going back to your portfolio, Drew, can you highlight the most strategic and highest quality assets?
So I won't highlight all the assets in the portfolio because there's 47, but let's talk about the 5 that make up the bulk of our net asset value and what most investors care about. There's 3 operating assets under consideration. The first asset that I'll talk about is Madsen. We have a 1% royalty on that. It's a high-grade underground deposit in Ontario operated by West Red Lake Gold Mines. The second asset in the portfolio is the Bomboré silver stream that's operated by Orezone. This generates tremendous amount of silver leverage for our investors. It's a 50% silver stream, as I mentioned earlier, with no ongoing cost to any of our investors. And what we love about this asset is they've announced not 1, but 2 throughput expansion initiatives, one that's currently being completed and another one that's slated to go on next year. So we have really good torque to the silver price rising while that production profile rises as well. The third asset in the portfolio is the Zancudo mine located in Colombia, and it's operated by Denarius Metals. It's currently doing small scale production, but what we're excited about is they have a mill on site that's slated for 1,000 tons per day that should be installed by about midway this year. So in the back half of 2026, we should see some real meaningful revenue growth out of that asset. Let's talk about our development portfolio. There's 2 assets I want to highlight. The first one is Pitangui, which is operated by Jaguar Mining in Brazil. Pitangui is just under 1 million ounces. It's got high grade and it's located 20 kilometers east of their operating mill. That's slated to start development this year and start producing for us in 2027. We have an $80 per ounce royalty for the first 250,000 ounces, and then it drops to 1.5% thereafter. That's going to generate some really chunky cash flow early in the mine life. The second development asset I have to highlight is our royalty on Ormac. Ormac is operated by Banyan Gold and already boasts a 7.7 million ounce resource and is driving towards a PEA later this year. We think there's going to be a lot of excitement around that asset in the near future.
And Drew, tell us, what makes Summit Royalties different relative to other startups?
We are embracing the same royalty model that all of our peers are, but here's a couple things that I think make us different. For a new royalty company to be cash flow positive on day one is very hard to do, and we're very proud of that achievement. The second part would have to be the fact that a lot of these assets are new and are in their first or second inning and have a lot of upside, not just with the drill bit, but also through throughput expansion. We love the fact that some of these production profiles are going to grow down the road. And the last thing I'd say is we're just the cheapest one in the market right now. And we think that's really compelling for investors to take a look at us while we play that catch-up trade with others.
And finally, Drew, what can investors expect from Summit Royalties in 2026?
Let's start with the catalyst of the portfolio itself. Madsen's about to declare commercial production. We're very excited to see how they ramp up and start getting steady royalty revenue from them. Our silver stream is also really exciting at Bomboré. They just announced the commissioning of their hard rock. That's going to raise production 50% this year alone. And next year, we actually see another increase that could double production from last year. That's going to create a lot of silver revenue for us. At Zancudo, we're going to see the installation of that 1,000 ton per day mill. That will really drive production growth and therefore revenue growth once that gets up and running. And at Ormac, we're expecting way more drill results as a result of the 2025 season, a new resource estimate, and a PEA this year, which will really crystallize value and demonstrate to the market what a remarkable asset it is. So on the corporate side, things aren't going to change. We're going to keep trying to do accretive deals and grow that NAV per share that really matters to us as investors and as managements of the company. Also on the management side, we're pushing through an OTC listing to open up to an American retail, and we're going to have some research reports out of Bay Street here in the next couple months.
Drew Clark, thanks for joining us.
Thanks, Jim. It's been a pleasure.
Hi, I'm Jim Gordon. Thanks for watching this Market 1 Minute on YouTube. If you want to keep up to date with other videos that we're putting out, you can click subscribe just below me or click on this list to see other great videos from Market 1. And thank you again for watching.